It's no longer science fiction. Ignoring the space sector could be the single biggest investment mistake of this generation. Once a playground for only the most ambitious governments and a handful of daring startups, space has exploded into a full-fledged, multi-billion-dollar commercial industry. Think about it. Our entire modern way of life is now propped up by space-based infrastructure. From the GPS that guides your drive to the financial transactions that happen in milliseconds, none of it would be possible without the complex network of technology orbiting our planet. And this is the part most people miss. The real revolution isn't about leaving Earth. It's about understanding and improving life on it. But here's where it gets controversial. We are standing at a monumental inflection point. The commercial space market is already a staggering $600 billion behemoth. And that number? It's projected to nearly triple, reaching an almost unbelievable $1.8 trillion by 2035. This isn't just a niche market anymore. It's a legitimate, standalone asset class right up there with fintech and renewable energy. We are witnessing an industrial transformation on par with the dawn of the internet. And this is no longer speculative. Recent global events have proven its critical, non-negotiable value. Because of this immense strategic importance, one could forcefully argue that it is borderline irresponsible for large institutional investors and pension funds not to have a dedicated allocation to space. What do you think? Should protecting retirees' futures now depend on investments in orbit? When New Space Capital was founded 7 years ago, our mission was clear: to create a gateway for major institutional players to enter this market at precisely the right time, the moment just before its explosive, mainstream takeoff. Our entire strategy is built on a simple, yet often overlooked, principle: focus on maturity. We target growth stage companies that have moved beyond the prototype phase. These are real businesses with real, paying customers and solid, recurring revenue streams. They've already proven their technology works in the real world. This is the crucial threshold where the space sector truly becomes investable at a massive scale. At this stage, the terrifying technology risk, the fear that a brilliant idea just won't work, has mostly evaporated. We're not funding science projects. We're investing in established enterprises with tangible products and soaring demand. And this is key for big money. Institutional capital is only comfortable with one type of risk: execution risk. Can the company grow as planned? The question of whether the core technology functions at all must be settled. That's why we insist on companies that are already generating substantial commercial revenue, typically a minimum of 10 million euros. Many of these are crucial links in the supply chain, creating the essential components, systems, and software that power satellite operators and data platforms. Others are on the application side, performing the magic trick of turning raw satellite data into priceless, actionable insights for giants in insurance, energy, logistics, and agriculture. Yet, when the average person pictures space investment, they dream of rocket launches. But here's the controversial truth almost everyone gets wrong. The real gargantuan value isn't in the launch vehicles themselves, but in the endless stream of data they enable. Think about it. Who are the biggest customers for space-derived data today? Surprisingly, it's often not governments or defense departments, but traditional earthbound industries. Sectors like insurance, farming, energy, and global logistics are now utterly dependent on satellite data to monitor weather, track environmental shifts, evaluate risks, and optimize complex operations. For many, their business would simply grind to a halt without it. Let's take a deep dive into a powerful example: the insurance industry in California. Wildfires have become so frequent and devastating that many major insurers have simply stopped offering policies there. The risk was too unpredictable and the potential losses too great. But the insurers who stayed and are now thriving, their secret weapon is geospatial technology. They use AI-powered analysis of satellite imagery to assess property risk in real time, predict fire paths with shocking accuracy, and monitor active blazes. This space-based data doesn't just give them an edge. It literally makes offering insurance in high-risk areas a viable business again. Without satellites, the market would collapse. Does this change your perception of what space tech actually is? This brings us to the core reason space is so investable right now. It's fundamentally about infrastructure, not exploration. Satellites are the invisible backbone of every modern economy. But this creates a huge, ironic challenge for investors. Most institutional spreadsheets don't have a space category. Instead, these investments are awkwardly splintered across unrelated sectors like telecommunications, logistics, or even pharmaceuticals. This confusion completely breaks traditional asset allocation models. For the sector to receive the capital it deserves, this outdated categorization must change. Now, a common counterpoint is that space is still risky, and it's true that very early-stage ventures carry significant technology risk, which is precisely why institutional money has historically avoided them. But the sector has grown up. There is now a large and growing cohort of companies with proven business models, strong customer bases, and robust sales pipelines. Here's another critical nuance most miss. Space is not one monolithic thing. It's a wildly diverse ecosystem, encompassing everything from companies that are commercially mature today to those working on futuristic concepts that are still a decade or two away from profitability. This is the central contradiction every investor must understand. The term space infrastructure can mean everything from the steady, reliable companies providing laser communications to the highly speculative science projects like manufacturing drugs in zero gravity. One is generating revenue now. The other is a thrilling but long-term bet. They both fall under the space umbrella, but their risk profiles are worlds apart. The key for savvy investors is to disaggregate the sector, to separate the proven from the speculative. Ultimately, a dedicated space allocation will become a non-negotiable component of any well-diversified portfolio. This isn't just about the market's jaw-dropping current and future size. It's about its profound interconnectedness with every other critical sector on Earth. Space technology directly intersects with and amplifies our efforts in climate science, food security, energy transition, and global security. It supercharges ESG, environmental, social, and governance goals, enhances supply chain transparency, and offers the potential for stable, long-term returns once the initial technological hurdles are cleared. We might not see the satellites overhead, but their impact is deeply practical, touching almost every facet of our daily lives. Now, let's talk about Europe and the UK, because this is where a serious gap emerges. The United States is currently lapping the rest of the world in both private space capital and a forward-thinking commercial mindset. The vast majority of our own investors are American. There are some bright spots, like Luxembourg, which is punching far above its weight through its proactive space agency and pioneering initiatives like Space for Finance that connect satellite data to sustainable investing. But for Europe to truly compete, its governments need to step up as anchor customers, using their purchasing power to create demand and de-risk investments for the private sector. Right now, European capital markets still largely view space as too exotic and too dependent on state funding. This perception is outdated and needs a radical shift if we want to build a competitive space economy on this side of the Atlantic. It's incredibly encouraging to see that large institutional investors are finally starting to wake up to this reality. They are beginning to see that the smart bet isn't on far future moon landings, but on the indispensable data and infrastructure being built today. The companies that will deliver strong, recurring revenue are the data platforms, the analytics firms, the component manufacturers, and the software providers. Their revenue is real, their customers are global, and their market is expanding at a breathtaking pace. And we haven't even seen the full impact yet of artificial intelligence, which is poised to supercharge this entire sector's growth by orders of magnitude. The evidence is overwhelming. The opportunity is undeniable. The market is primed and ready. After reading all this, can you really afford to ignore it? Space has rapidly evolved from a speculative dream into the ultimate must-have investment.